Whether it's IRAs, HSAs, EINs, or RMDs, the Internal Revenue Service, or IRS as I like to call them, loves their initialism. And of all the terms that self-directed IRA or SDIRA holders have to contend with, three of the most important are UBIT, UBTI, and UDFI. Understanding each of these concepts is essential to ensure your SDIRA is complying with the IRS regulations and fulfilling its tax responsibilities. Hi, it's Ben Tushman with the Entrust Group. In this video, we'll demystify UBIT, UDFI, and UBTI. We'll break down their definitions, explore when and why they apply, and explore some strategies that you can employ to manage their impact. Let's go. UBIT, UDFI, and UBTI are important tax concepts that ensure tax-exempt accounts and organizations, including IRAs, do not misuse their tax-exempt status. Got it so far? Doesn't matter. We'll get into a simplified explanation of each term. UBIT stands for Unrelated Business Income Tax. It's a tax imposed by the IRS on income generated by certain tax-exempt organizations, including certain income earned by IRAs and other tax-advantaged accounts. In general, income subject to UBIT is income generated by business activities unrelated to the primary purpose of that account or organization. For example, let's say a nonprofit university regularly sells branded merchandise unrelated to its educational mission. That income could be subject to UBIT. Now, UBTI stands for Unrelated Business Taxable Income. It's the specific income within an IRA or other tax-advantaged account that is subject to Unrelated Business Income Tax, or UBIT. Building upon the university example from earlier, all income generated by t-shirts and sweaters sold by the university could be classified as UBTI. That Unrelated Business Taxable Income, or UBTI, would then be subject to Unrelated Business Income Tax, or UBIT. If you get confused between the two, the main thing to focus on is the last letter of each initialism. UBTI, that means income, and UBIT, that means tax. Lastly, UDFI stands for Unrelated Debt Financed Income. UDFI is a subset of UBTI, and it refers to the income generated by an IRA or other tax-exempt account that would otherwise not be generated except for the use of debt or leverage. When an IRA borrows money to make an investment, any income generated by the leveraged portion of that investment can be considered unrelated debt-financed income, or UDFI, and it's subject to Unrelated Business Income Tax, or UBIT. For example, let's say your IRA takes out a non-recourse loan to pay for 40% of a multifamily property held in your IRA. Then 40% of the gross income generated by that property can be considered unrelated debt-financed income and subject to UBIT. Now, maybe you've noticed already, but UBIT, UBTI, and UDFI all begin with the same word, unrelated. In the eyes of the IRS, the purpose of an IRA is to set aside money for retirement, not to reduce tax liability for any business that happens to be held in an IRA. Let's say you use your IRA to invest in a limited partnership that runs a sandwich shop. The active income generated by the restaurant by selling turkey, tuna, and meatball subs, maybe a little prosciutto, that will be deemed unrelated to the primary purpose of the IRA. On the other hand, the passive income generated by your IRA in the form of dividends, interest, royalties, that is not subject to UBIT and thus not taxable. Now, you might be thinking, this doesn't make any sense. I'm saving the income in my IRA to provide financial security in retirement. Why do I have to pay tax? That may be true, but UBIT and UDFI serve another purpose beyond raising tax revenue. They help foster a competitive economy. UBIT was originally introduced in 1950. It aimed to prevent tax-exempt organizations, including 501c nonprofits, from gaining an unfair tax advantage by engaging in business activities deemed unrelated to their primary purpose. Imagine if all nonprofits who regularly sell food or merchandise could always undercut the prices of the competition. simply because they had lower tax liability. That would create an anti-competitive environment. So when these organizations generate income from business activities unrelated to the purpose that earned them their tax-exempt status, that income becomes taxable. And as soon as IRAs were established in the 1970s, this rule extended to those accounts to serve a similar purpose. So while the taxation of certain IRA income may seem counterintuitive, remember that it's a regulatory measure aimed at maintaining tax fairness and healthy competition. Okay, so now you're hopefully on board with the concept, but how do you know if your SDIRA owes UBIT? Here's where it's important to note that any content included in this video is for informational purposes only, and it is not a substitute from advice from a trusted tax or legal advisor. To reiterate, the most reliable way to determine your IRA's tax liability is to consult a trusted tax advisor. However, there are certain key indicators that you can use to help identify whether your IRA is subject to this tax. UBIT generally applies if the income generated by your IRA meets all of the following criteria. 1. The income is generated by a trade or business activity, such as selling goods or services. 2. The activity occurs regularly, for instance, generating monthly or quarterly income. And 3. The business activity is not related to the IRA's primary tax-exempt purpose. Certain investments are more likely to generate UBIT. Think frequent real estate transactions or numerous private loans made within a single year, or income-generating businesses, let's say a carpet cleaning business. Investments using third-party loans, limited partnerships, and limited liability companies. All right, and that concludes our brief overview of UBIT, UDFI, and UBTI. Of course, there's much more to learn about the intricacies of these three terms, so be sure to check out our full blog post. There you'll find 5 of the most frequently asked questions we get revolving around these terms, and 2 simplified examples of how to calculate UBIT and UDFI. We'll link that article in the description. As always, feel free to let us know if you have any questions, and if you want more SDIRA-related content, feel free to give us a follow on whatever platform you're watching this on. We'll see you next time.